Good morning friends and welcome to the pre-market view. Friends, we had a major carnage in Europe across the markets. Most of the markets were down about 3%, and in key developments, Spain and Italy have banned the short selling of the financial stocks. Also friends, the bond yields have really shot up and they have refused to cool down. So the risk of the contagion spreading to other nations has actually increased. And when the US markets opened up, they were also down quite sharply, but towards the end there was some recovery and they ended down almost about 0.8 to 0.9%. Also friends, as I said before, that earnings season is underway in US, and from whatever numbers have been announced, 40% of the companies have actually missed the earning targets, so which is quite disappointing. And today when we look at the Asian markets, most of them are down about 0.5%, and in case of Hong Kong, the morning session actually got cancelled because of the typhoon, so no real major cues coming out from there. And in terms of the flows, FIs were net buyers to the tune of 109 crore in the cash market, and the domestic institutions were sellers to the tune of 354 crore. Also friends, Euro has hit a new 2-year low against dollar at about 1.20 odd level, and the Brent crude has actually come down from almost $105, $106 to 103. So very sharp, about 4 to 5% cut in the Brent crude as well. On that note, let me invite Shaival to take us through the important F&O cues and the strategies. Hi Shaival, good morning.
Good morning.
We saw a major cut in our markets after a long time. We gapped down almost 50 points and then we failed to recover. But what is your sense of the flows at this point of time?
In the futures and options market, in index options, they were net buyer of around 2,900 crores. Rest all the instrument, they were net sellers. So this is still indicating that there is cautiousness amongst the FIs and the majority of the participants in the market, because we have futures and options expiry lined up on Thursday. Then we have RBI monetary policy meet. Also, we have been hearing that there's some suggestions to increase the diesel price. There's also an increase in the petrol price. So all this thing together has been worrying the participants in the market, and still I feel from the FI's flow that they have been taking this position as a hedge to their portfolio or from the current position which they are holding.
Also Shaival, after a long time we're seeing some spike in the IVs. They had actually gone down to almost about 14 odd percent. Now because of this movement there's a spike up. So what's your reading of that?
See, after a long time the implied volatility have shot up by around say 10 to 12%, or maybe say by 400 to 500 basis point, which has been indicating that still the uncertainty in the market would continue to prevail, and on higher levels what we would say is selling pressure would come in on the higher side. Now 5,200 call option of the current series is having is standing with the highest number of shares in the open interest in the current metrics. So in the intermediate term, what we can say is that 5,200 would act as a hurdle for the market, and on lower side, as we have achieved the target of our weekly VWAP. Previously our target was 5,140 and 5,100, and yesterday we have closed below 5,140. So now we feel that the momentum on the lower side would continue, and probably 5,050 and 5,000 can be seen on the cards.
Okay, and any other interesting ideas that you can share with us?
Yeah, we have identified 3 stocks from the 2 stocks from intraday perspective and 1 stock from positional perspective. We are recommending sell on Ambuja Cement with the resistance of 170 rupees 30 paisa. Apollo Tyre is also looking negative, so one can short that with resistance of 83 rupees 05 paisa. And yesterday we have initiated put option of TCS 1200. We have recommended it for buying. There's no stop loss as we are recommending it for expiry. One can eye a target of 15 and 20 rupees on this.
Right, Shaival, thanks a lot for that update.
Thank you.
Friends, back home we had a very disappointing session and we gapped down 50 points, and market actually did not take any support around 5150, 5170, which was earlier an important support where the market had actually bounced back a couple of occasions. But since we have broken down those levels, we believe that the overall sentiment definitely has turned negative. Talking about the company specific news, we have news that the state owned oil companies have actually announced another hike in the petrol price of about 70 paisa to 90 paisa per litre. And we have also seen the crude price coming down from 107 to 103 odd levels. So that's positive for a stock like BPCL. So we are recommending a long call on BPCL with a stop loss of 370 and a target of about 390 to about 396. Also, in a major relief to the telecom companies, the EGOM has announced a lower base or a bid price which is going to start at about 14,000 to about 15,000 crore, and this is definitely positive for Bharti and Idea. So we are recommending a long call on Bharti with a stop loss of 297 and a target of 314 to 320. And even for Idea, there could be some pullback because we've seen a major knee-jerk reaction in Idea after the poor numbers that they announced. So one could actually initiate Idea around maybe 79 odd levels with a very tight stop loss. Power Grid, which is a state-owned distribution company, has announced a major foray into electricity distribution and is in talks with various states. So we are suggesting a long call on Power Grid with a stop loss of 107 and a target of 112 to 115. SR Oil has tied up a credit line of almost 5,000 crore to meet its sales tax liability of 6,000 crore. So we are suggesting a go long call on SR Oil with a stop loss of 52.5 and a target of about 56 to 58. Kane India actually announced their numbers, and this was the best ever quarterly performance that Kane has come out with, wherein their net profit grew by almost 40% on the back of higher oil production and better realization. So, and also there are reports that there is going to be a significant scale up in their production as some of their oil fields in Rajasthan have started operations recently. So we are suggesting a go long call on Kane India with a stop loss of 314 and a target of 332 to 335 levels.